Amid rising concerns over the US fiscal position and Trump reigniting trade tensions, the Sell America trade was in play again. But what should we be watching for the coming week? I'm Fiona Cincotta at StoneX, and today I'm joined by Head of Global Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
So what are the general market conditions we should expect to deal with next week?
Well, we were heading into a fairly quiet week. It seemed like markets were settling. Obviously, the 4-week run from US indices and other risk assets was starting to slow down. Obviously, that Moody's downgrade that we had at the end of last week was starting to impact some of the enthusiasm from the recovery of the pullback on tariffs. But that quiet and going into a holiday weekend is going to be disrupted, has been disrupted on Friday because of the application or threat of application of tariffs by the United States or by President Trump on the EU and Apple. So it brings back yet again a familiar theme, trade wars, but it compounds because now the markets are paying much more attention to the financial concerns in the United States, world's largest economy, and it just gives another set of uncertainty. And against the backdrop of thin liquidity, because the U.S. and U.K. markets are offline, that is going to create some possibility of sharp movement and volatility. Because when you have thin markets and you have the propensity for surprises, then you can get dramatic movements. Whereas normally you'd expect quiet, because normally we are heading into a more quiet period further into the start of the summer doldrums. But I think all bets are off if you're looking for a really quiet buy and hold, take the entire week off situation.
Okay, and so what are the most potent themes that could upend the calm for the bulls or the bears?
So it's both the trade wars and the financial uncertainty in the United States. It's very US centric nowadays, but that's where most of the headlines seem to be coming out of. But those trade negotiations are certainly a global consideration. It was the fact that we had 90 days respite between the United States and most of its trade partners, and obviously the more recent announcement between the US and China. But that 90-day time frame obviously was thrown for a loop when it was suggested that they were going to start making individual discussions or agreements. Clearly, that's going to be put to the test because we have this EU threat now. And I think that's just going to draw a lot of clouds and create a greater sense of uncertainty. In this kind of scenario, you can't really relieve that threat because it's so ambiguous. But what you can do is you can exacerbate it. So it's much more of a distinction towards a abrupt risk aversion scenario versus a abrupt risk on. It's more of a crawl for risk on. So that trade war themes, obviously the Moody's downgrade, people still don't know what to make of the U.S. as being the only top safe haven that's really spoken about in those terms. We see it with the US dollar, see it with US treasuries, but there's still a long term consideration there. And whether the market's going to make anything of it now is going to be something to watch. And of course, we can always watch these themes spilling over into more traditional economic considerations like growth concerns. Will it lead to late rate cuts? What happens if the Fed doesn't follow or pursue those rate cuts? Earning concerns, and of course, sentiment surveys, which we have actually quite a bit of over the coming week.
So what is the top event risk next week that can spur these themes or kick off a new focus?
So obviously Monday is going to be very quiet. That is kind of a table stakes day. Just watch the headlines. If you're trading on that day, smaller ranges or pick your market wisely. When we get into Tuesday, we start to get into some more tangible macroeconomic event risks that can actually tap into key themes. I would say watch the Chinese industrial profits figure early in the day. And then we have the US consumer confidence report from the conference board. Now, if you recall, the University of Michigan consumer confidence that we had previously hit the lowest since November 2022. The expectations dropped to the lowest since 1980. And the inflation outlook, the short term inflation outlook, surged to the highest in decades as well. Now, that was a May reading, and it contradicts a lot of the expectations that followed with the pullback from tariffs. So, if this survey reinforces what the University of Michigan Consumer Confidence said, we're going to have more problems. Wednesday, I'll be watching the RBNZ rate decision if you are watching monetary policy globally as a macro theme. But I think most headlines will be dedicated to Nvidia earnings after hours. Obviously, taps tech, it taps earnings, it taps AI, all the lovely themes that have been a bull driver at one point or other over the past year. Thursday, very active in Japan. So with the U.S. and Japan supposedly going to meet for their fourth round of trade negotiations, and on the heels of the announcement for the EU from the U.S., we're going to watch those headlines, but also the data: consumer confidence, Tokyo CPI, retail sales, industrial production. That spills over into Friday. That's going to be an important round of data. And Friday, really, there's two things I'm going to be watching. One, emerging market GDP, because we have Turkey, India, Brazil, Canada. Canada obviously is not an emerging market, but it's also giving us first quarter GDP reading. And then the other round of data is going to be around the US. It's going to be trade balance, and it's going to be the US PCE deflator, which is the Fed's favorite inflation indicator. So we can really get a sense of how's the economy doing with the trade figure for April, but also what is the inflation outlook looking like, and how complicated is the Fed's job going forward. And obviously, with these pressures building up, I'm sure the White House is going to take another poke at the chairman to cut rates.
Excellent. Well, thank you very much for your analysis and telling us what to be watching out for next week.
Thank you.
For more videos like this, please do like and subscribe.